Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now Ethereum is fighting to maintain this area of support, and it's been struggling recently because the US stock market just opened and the S&P 500 opened around 2% lower than where it was on Friday afternoon. But while all of that is happening, we are seeing the Ethereum estimated leverage ratio continue to explode to the upside. I'll be covering all of that and more in this video, so definitely stick around to the end so that you don't miss out on any of this important information. And just before we jump into it, feel free to leave a like down below, and if you're new to the channel, you might as well subscribe with notifications turned on for more update videos just like this every single day. But with all of that out of the way, let's get straight into what this video is about. So right here, we're on the Ethereum to US dollar chart on the daily time frame, and we've got our same levels of support that we've been looking at over the past few days. And in fact, over the past couple days, we have been maintaining above this level of support, coming in between 2.3k and 2.4k. But on the current daily candle that we are seeing right now, obviously the price of Ethereum has dipped below that area of support, but we haven't seen the daily candle close just yet, which means we haven't seen a confirmed break below that level of support. For example, if Ethereum could somehow see a bounce back above around 2.3k when it comes time for the daily candle close, then in that case, we could technically still be holding above this level of support. But if Ethereum does experience a confirmed break below this level of support, then the next major level of support for Ethereum is coming into play at around 17 to 1800 US dollars per Ethereum. And obviously that price range is the May, June, and July lows. And just before we talk about the stock market open and the insane Ethereum estimated leverage ratio, first I'll just quickly remind you about this chart right here, which is the Ethereum to US dollar chart on the 3-day time frame. And the subscribers on this channel that have been watching my other Ethereum videos would already know about this chart, but for anyone new to the channel, basically the 3-day RSI shows us anytime we're in a strong downtrend, obviously, but then what we see in pretty much all of these previous downturns in the price of Ethereum is a new uptrend only begins after the Ethereum RSI starts a new uptrend on the larger timeframes like the 3-day charts. And for that to happen, we need to first see a break above this descending line of resistance in the RSI coming in at around 35 approximately. And then after that, we need to start forming some higher lows and preferably some higher highs in the Ethereum 3-day RSI. And after we see something like that play out, that is how you know that the price of Ethereum is beginning to turn around and potentially play out some more bullish price action. But for now, we are not seeing that. I want to make it clear. So for now, it is just a waiting game. We haven't confirmed a bottom just yet. And once again, that is nothing new for the subscribers out there. I have been talking about this for a while now on the channel. And while we're here on the 3-day Ethereum chart, I thought I should zoom out because the Ethereum RSI on the 3-day chart is now trading at a lower value than what we saw in the March 2020 crash. And we are also at lower values right now than what we saw at the end of 2019, which means the last time the Ethereum 3-day RSI was this low was at the end of the 2018 bear market. And just for a bit of context here, of course, we saw a lot of bearish price action leading into that low, which by the way, that low was coming into play at around $80 per Ethereum, just 80 US dollars per Ethereum. And that once again brought the 3-day RSI well into oversold territories, giving us an amazing buying opportunity for anyone that was holding for the longer term. So yes, as I just said, this does not confirm the bottom or anything like that. Yes, we can go lower, but my personal Ethereum strategy is to simply dollar cost average into Ethereum and hold for the longer term. And now taking a look at the Ethereum estimated leverage ratio, and right now we are seeing this ratio explode to the upside. For anyone that is new to the channel, the Ethereum estimated leverage ratio, which is represented by this purple line right here, basically shows us the amount of Ethereum open interest currently active on exchanges relative to the amount of Ethereum that is sitting on exchanges. So basically, if traders are taking on more and more leverage to open up bigger positions, then that can push the Ethereum estimated leverage ratio to the upside alongside simply withdrawing Ethereum from exchanges. And we are seeing both happen right now, which is why the Ethereum estimated leverage ratio is exploding to the upside, which means we are still yet to see the liquidation event, either a long squeeze or a short squeeze. And so it's only a matter of time before we eventually squeeze out a lot of this leverage. And when that happens, that is likely going to result in an extremely volatile move with a lot of volume. And after we finally see something like that happening, that is when it could be more likely that the markets might turn around, as in we might see some more bullish price action after we finally squeeze out a lot of this leverage. But it is very important for us as investors and traders to not only look at one thing. For example, the stock market right now is clearly still looking bearish here in the shorter term, and it is unlikely that the crypto market will see a major recovery without the stock market at least experiencing a decent bounce. So let's just say if the US stock market continues on this downtrend, then it is very likely that we'll see some more bearish price action for crypto. And by the way, this chart right here is the S&P 500 index on the 1-day time frame. And you can see here that the S&P 500 index opens the day around 1 to 2% lower than where we closed on Friday. And already in today's trading, we have seen some bearish price action in the S&P 500, which is obviously not the greatest for the crypto market. But just zooming out on the daily time frame, what we can see right now in the RSI for the S&P 500 is the fact that we are well into oversold territories. And the last time we were sitting in oversold territories in the daily RSI for the S&P 500 index was back in the March 2020 crash. So yes, if you're looking in the shorter term, we did see a lot of bearish price action for around 1 to 2 months. But for anyone that was simply dollar cost averaging and holding for the longer term, obviously they did very well. And looking on the NASDAQ 100 index on the daily time frame, we are basically seeing the exact same thing. And here on the 3-day time frame for the NASDAQ 100 index, we are seeing the 3-day RSI enter into oversold territories. And in case you could not see right here, that does not happen very often. In fact, over the past 1 decade, so since 2012, we have only seen the 3-day RSI for the NASDAQ 100 index enter into oversold territories just 2 other times, not including this time. And those 2 other times over the past 1 decade was during 2016 and during March 2020, because the crash that we saw in the NASDAQ in 2018 did not bring the 3-day RSI down into oversold territories. We got close, but we didn't actually enter oversold territories. And then if you're looking just further out from a decade, of course, we have the 2008 global financial crisis, which obviously entered us into oversold territories. But anyway, I just hope you understand how rare this is. Once again, only 2 other times over the past 1 decade that this has happened. So yes, the shorter term trend, if you're looking on the 4-hour chart or even on the daily time frame, we are technically still in a downtrend and we haven't confirmed a bottom just yet. But it is important to keep an eye on the bigger picture to see what is happening over the longer term. So that is why I am personally using this rare opportunity to accumulate some more Ethereum and hold for the longer term. Now, it's important to mention that that is not financial advice. I'm just sharing my Ethereum strategy. And of course, I want to make it extra clear that that does not mean the price has bottomed out just yet. If you want to get extra updates on the financial markets just like this, make sure you follow me over on my Twitter, and the link to my Twitter is in the description down below and also in the pinned comment. If you made it this far in the video, you might as well leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. For anyone that is new to the channel, I actually have a video right here in the bottom left, which shows you how I earn passive income on my crypto every single week. And I'm actually using that free passive income that I am earning from those platforms to continue to dollar cost average into the market. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.